Today we're sitting down with John Kunkel of JK Home Loans and talking about seller concessions, one of the most powerful tools and underused tools available to home buyers in today's market. Seller concessions allow buyers to negotiate with sellers to cover a portion of closing costs. They can fund a buy down rate or offset prepaid expenses at closing. So with inventory up and sellers more motivated than they have been in years, now is one of the best opportunities buyers have in recent memory to make this ask. So today, John and I will walk through how concessions work by loan type, how to structure the request without hurting an offer, and what buyers need to know before they sit down at the closing table. So come and see what we have to say.
Today, we are getting into something that I believe is one of the most underutilized tools available to home buyers right now, and that is seller concessions. A lot of buyers hear that term and either do not know what it means or assume they cannot ask for one. Both of those things cost people money at the closing table. Let's start with the basics because context really matters. Can you explain in plain terms what a seller concession actually is and why a buyer in today's market should be paying close attention to them?
Most of the time we're seeing a seller concession as where a seller is asked to pay a buyer's closing costs. And these are going to be things like title insurance, title search, any fees that the lender charges, maybe an origination fee, things like that are all part of the loan charges that a buyer is going to have to pay to be able to close a loan. And lots of times a buyer will be like, okay, I got my down payment saved, but they don't realize that they have sometimes just as much in closing costs that they have to pay, depending on, like with an FHA loan, it's 3.5% down. Sometimes you're seeing 6% in closing fees. So that's even more than a down payment. So it depends on the type of loan. It's a little bit less for maybe a VA and it's about the same for an RD. It's going to depend on the lender. It's going to depend on the type of loan. It's going to depend on the buyer. But it does give a chance for the seller to help the buyer a little bit and actually help them get to closing. And it's going to open a seller up to a bigger pool of buyers that didn't necessarily have that opportunity to save all those funds up.
Right, so really the buyer may just have to come up with their down payment and they can use those seller concessions to pay off all their closing costs. And they may have some left to buy that rate down.
Right, exactly. Yeah, they could possibly do both.
So the market really backs up what we're describing. Nationally, inventory is up, homes are sitting longer than they were at the peak, and sellers have adjusted their expectations. In fact, nearly 4 in 10 sellers in 2026 expect to make some form of concessions, which is up noticeably from year to year. Now, we're in a different market. We're not the big national market. What are you seeing here locally?
Personally, I think we're more of in a balanced market. I wouldn't call it a buyer's or seller's market. We were definitely in a seller's market last year, but it has become, we've gotten more inventory, prices are still up, interest rates aren't coming down. So it's a chance for buyers to get some negotiation, but sellers are still kind of holding the line so far. They're not coming down a ton, but they're more likely to do those concessions, more likely to be negotiable, maybe on their price, or even reducing their price to get it into a different buyer area where they are like, okay, I can make an offer on this and see if we can get something together.
From the mortgage side, the rules around how much a seller can contribute vary depending on the loan type. Have you ran into situations that has caused frictions, and how do you typically handle those coordinations with the lender?
Well, it really is kind of frustrating, honestly, especially if the buyer isn't talking to a lender before we get to ready to write an offer. Because if I ask a buyer, can you pay your closing costs? They're like, what's that? They have absolutely no idea how much this is going to cost. They don't know. Sometimes don't even know what type of loan they're going to get. So that's really hard for me to know, is this buyer going to get to closing if they don't even know what type of loan they're going to get? They haven't talked to the lender. They haven't found out what they can get approved for, much less what their closing costs are. So it is really not only just to show a seller a pre-approval letter and say, yes, they can get pre-approved for this, but what type of loan of it. And some sellers don't want to work with certain type of loans either because they have that additional appraisal process to go through. So it is really helpful to not only get that pre-approved, but also have that lender be in contact with the buyer's agent. Of course, they're going to be in contact with the buyer's agent, so that the buyer's agent knows what to put in the offer, how much the limit is for that buyer and the type of loan. And so then we don't have to go through renegotiation, which can make the deal easily fall apart.
Right. So that is really exactly why, as a broker, that I try to work with those buyers up front and let's decide what type of loan do they need based on their financial structure. And when I know the loan type, the down payment, and the purchase price, we can structure that loan from the very beginning so the concession fits within that allowed range. And every loan program has room to work with. It's just a matter of knowing the framework. Laura, what happens to a deal when the lender-agent communication does not happen early?
It can be very frustrating for everyone involved because the buyer feels like they've already got a deal and they're ready to move forward. They're comfortable with the price. They knew they were pre-approved, but then they find out, oh wait, I have to come up with this other money. How do I get this to closing without the seller helping me out? I still got to pay for the inspection. Somebody's got to pay for the survey. You know, as my dad always says, there's only so much toothpaste in the tube. It's got to come from somewhere. So it could mean that the buyer would lose out on the house, especially if we've already kind of got it under contract. The seller's like, well, I was agreeable to these terms. I'm not okay with these terms. Now you're taking money away from me. And so, yeah, it could be really frustrating for everyone involved if you don't get that up front.
Right. And so that's one reason, too, is that we understand right from the beginning that we want to structure strong offers so it's smoother closings.
Right.
And exactly up front, and the buyer, if they give us permission, I'll call and talk to you and say, here's what they're approved for, here's how the seller concessions are, and I'll give you an offer letter based on their offer price. If they need a counter, we'll give you an offer letter based on the counter price.
Right. And that is something that buyers need to be aware of. Every time you make an offer, I'm going to have you do a new pre-approval letter. I don't want the seller necessarily to know that you can do more because then they could counteract that.
Right, and it also strengthens that offer. The
Right.
seller knows that they are pre-approved and they're not going to have to potentially worry about something following through.
Right, exactly. Yeah, it does make it stronger, although we all know that doesn't necessarily you're getting to closing because you have that pre-approval.
No, we're not closed until that pen has written and signed that contract.
Right.
At the end. Let's talk strategy, Laura. How do you advise buyers to think about asking for concessions when they are pulling together an offer? Is there a way to make that ask without hurting the overall offer?
Well, and oftentimes a seller or a seller's agent maybe is when negotiating, they'll just add those concessions onto the price. And so then the seller's netting the same thing, but that can sometimes cause problems later down the road. Sometimes, like I said, there's certain loans that you can ask for a certain amount up to. You don't have to ask up to that. That could be a buyer saying, okay, well, I only need a little bit. So that would be one way that you could help out, get the seller to agree to something. And sometimes I see a lot of sellers that I ask for concessions when I present the offer. They're like, the buyer wants me to pay their loan. And I'm like, well, kind of, sort of, not. But actually, they're putting it in their loan. They're still paying for it. You're not paying for it, you're just putting it into the deal so that we can get it to happen. So you have to be able to explain it to the sellers too so that they understand the process and aren't just getting upset about the buyer asking them to do something for them.
So can you give us a real life example of, let's say you've got someone going to offer a $200,000 on a house and they're going to ask for $7,500 in seller concessions. So if the seller receives that, they would actually be getting $7,500 less than
Right.
the $200,000 asking price.
Right.
What if they said no? What is the option for the borrower?
Okay, and that's always what I come back to. Okay, we're going to assume that I'm representing the seller. And so we get this offer for the $200,000 and the buyer asking for $7,500. Almost always my seller's first answer is no. Almost always. And I'm like, okay, you got to realize that, do you want to throw this buyer away? They're actually interested in your house. How can we make this work? Let me see if the buyer would rather you increase the price or take out the closing costs. That's usually the first thing I say. And then, something else I might be like, well, we haven't done a price reduction yet. We've, again, got an interested buyer that's actually making an offer. Are you sure you don't want to just take a little bit of price cut to actually get to closing? So again, I feel like it's about the negotiating with your client as much as what can we do to make this work. Sometimes, I've talked to a little bit about sellers. Maybe we could do something different. Is there another way we can get this to closing other than you paying $7,500? Just kind of throwing ideas out there to them do you have any other ideas? You know, like, how can we make this, because this buyer is interested?
Could you raise the price?
Right.
You know,
That's
that's
the
one of
most
the
often
things.
one.
Yes. So one of the things too, from a marketing standpoint, is instead of a seller lowering their price, if they market it as seller will pay up to X
Right.
number of concessions.
Right. Yeah, and we definitely see that the seller will list it that way. Just like kind of like a seller might say, okay, I'll give you a flooring credit. So there is options to put it out there ahead of time. You know, sometimes even a seller will put a home warranty on a listing. It's just an incentive to get the buyer to come in the door and say that, okay, I'm negotiable. They just kind of put it out there, you know, so it helps a buyer see possibilities.
One thing we talk through with buyers is that seller concessions are not limited to just covering closing costs. They can also help fund a rate buy down, which lowers the monthly payment. That flexibility makes them a powerful tool. Can you walk us through how you have seen that play out in recent negotiations?
Honestly, I haven't used the buy down. I've talked to sellers mostly about it during like maybe a listing appointment and saying this is an option. But I would honestly want to know more about it myself so that I can talk more to them too about it. But I would definitely say a buyer's not going to understand that either. So that's definitely something I feel like is kind of on your side, that you're going to have to put that out there to them.
So I'll kind of give an example. Let's say that we had that $200,000 offer with $7,000 in concessions.
Mhm.
Well, their closing cost in prepaid theoretically was $5,000.
Okay.
So they have $2,000 left. At closing, we could actually buy down that rate with that $2,000.
Well, and that definitely comes up before, because I've had, you know, because we always put that max rate in. As an agent, usually I put that max rate in, and then the buyer gets to closing and be like, wait, I offered based on me getting that $7,500, but now you're only giving me $5,000? Why don't I get a check for $2,500? So yeah, that would be a really great to do that so that the buyer feels like, okay, now I was upfront with everything and understand where my money went.
One thing is important for buyers to understand, as well as the realtors. Whenever we inflate that price to cover those seller concessions, that home still has to appraise for that new purchase price. Those numbers have to work. How do you handle that when structuring an offer to make sure everything holds together through the appraisal?
And I think that's very important, again, that a listing agent talks to a seller about during the listing process, because sometimes they're just listed above market price already. So then if you come in and do concessions and add that to the list price, that can be very difficult to appraise. And there is some people that will be like, well, what if this happens? And then you can explain to them, you can renegotiate once you get that appraisal. But every time we get an offer where they add the concessions on, you have to make them aware of that. This could be a problem down the road. So just so you know up front, you may have to take that cut later, or everybody might walk away. So it is important to address it at the right time up front and when you get that offer. And it also helps to have an agent that's working with the buyer do a market analysis for the buyer and say, okay, this is what they have it listed at, but this is what I'm seeing in the market, and this is why I think you should make this offer. And then that agent may need to pass that information on to the listing agent so that they can say, okay, I see where they got this offer that they're making and why it's not where we're at in list price.
And Laura, can you give us some examples of where you've used the concessions to make a transaction work in your recent negotiations, without giving us the details?
Well, I use it quite often to when buyers need help putting the closing costs in there. I can tell you about a recent transaction. It hasn't closed yet. Of course, I wouldn't know which property I'm talking about, but the buyer did ask for the cap of, this happened to be a VA offer, so it was 4%, but the seller was like, no, I'm only going to give you $2,000. So then the buyer had to be like, okay, can I come up with this money? How else am I going to be able to do this? Do I need to write a new offer and say, no, I'll raise the price? But they were able to go ahead and accept the seller's counter. So in that situation, it did work. And I would say it's fairly common to see the closing cost concessions. Like I said, not the buy down rate so much. I haven't even seen it accepted or receiving it as a listing agent or writing it up. So I'm expecting that to come up more often, especially if rates go up. But I would say it's fairly common to get those concessions in an offer.
I think it's great that these concessions are available. One thing I think that buyers and realtors need to keep in mind is when we run this through Fannie Mae for approval, Fannie wants to see what skin in the game does the borrower have. And
Right.
everything starts with the credit score.
Yeah.
That is your history and kind of the way you're going to pay your bills in the future.
Right.
So, if we get a accept eligible, we are good to go. If we get a refer, we can do a manual underwrite, which just means that a person is going to scrutinize that loan file much more than a computer approved. So even though we can get 6% in seller concessions, doesn't mean that Fannie's going to approve that amount.
Oh, okay. See, I wasn't even aware of that.
Right. So we can get on an FHA up to 6% of the purchase price, but it doesn't guarantee we can get that. So
Yeah,
because that can be a lot of money on some loans.
Right. And honestly, even ran into that. Like, we wrote up the offer. It wasn't my client or even my deal, but someone in my office had a deal where they did the cap amount. Everybody agreed to it, buyer, seller, everybody's fine. We get to closing and they can't use that cost. And we're like, well, why not? Everybody said it was okay. Well, it was probably Fannie Mae.
Yeah.
Because I didn't understand it honestly either. I'm like, I don't know.
But we will know that up front before we ever send them to you with the approval.
Oh, okay. Okay.
I love how those examples show this as not a workaround or a sign that a buyer is struggling. This is a legitimate financial strategy that smart buyers use across the board. For someone listening right now who is thinking about buying in the next few months, what is the one thing they should do first to set themselves up to take advantage of this?
Well, I think it's important for buyers to take advantage of everything that's available. Even we talked about the concessions, of course, that's mostly what we're talking about, but there's other assistance available. They can get down payment assistance. They can get grants for those closing costs too. So it's important to ask your agent, do you know what's available in the area? Ask the lender, is there programs that apply to me that I can get help with? And this helps for the seller also to know, the other hand, that they're not necessarily paying things for the buyer. So it's important to explain it to them and just make everyone aware of what's available. I think that's ask questions, I think, is a big part of it.
Right, and I would just add to that to really first meet with the lender to find out, because based on your credit score, what loans are we going to qualify for, and what are those concessions that we can
Right.
to really build a strong structure to take to the realtor.
Right, exactly.
And 100% open communication throughout the entire process with all parties.
Yes, and unfortunately, I've had some lenders that I don't know why. I mean, I know you don't get paid until it's done, just like I don't get paid. I don't know why the communication can be so difficult with some people, and I've definitely got that with you. You're very upfront and definitely on top of everything.
Thank you. You are very, very well to work with. So, Laura, this is a great way to put it. Thank you so much for being here today. For anyone who wants to reach out to Laura and the team at Ozark Gateway Realty, they're serving Northeast Arkansas and the Spring River area. And for mortgage questions, for understanding what programs you qualify for and how to structure all of this, reach out to us here at JK Home Loans. If you found today's episode helpful, please follow the show, share it with someone who is thinking about buying a home, and stay tuned for future episodes where we will continue bringing together industry professionals to help educate and guide buyers and homeowners through every step of the process. I'm John Kunkel with JK Home Loans. Thank you for listening to Closing Table Conversations. This podcast is produced by John Kunkel, NMLS 1416078 with JK Home Loans LLC, branch NMLS 2756538, a branch of Heritage Mortgage KC, licensed in Arkansas, Florida, Kansas, and Missouri. This content is for educational purposes only and does not constitute a mortgage advertisement, loan commitment, extension of credit, or financial advice. Loan products and eligibility are subject to credit approval. Consult a licensed mortgage professional for details specific to your situation. The views and opinions expressed by guests on this program are their own and do not necessarily reflect the views of JK Home Loans, LLC. Visit jkhomeloans.com to learn more.
If you found today's show helpful, please subscribe and continue following Laura's Lakefront Living. Share it with someone who's thinking about buying or selling, And stay tuned for future episodes where we'll continue to bring together industry professionals to help educate and guide buyers and sellers and homeowners throughout every step of the process. I'm with John Kunkel with JK Home Loans, and today we did closing seller concessions. So if you want more information about other costs that you can be seeing throughout the closing process, check out this video where I dive deeper. Thanks for watching and have a blessed day.